Hello, y'all. My name is Mike. I am not an investment guru. I'm just an average guy sharing my investment journey on the internet. In today's video, we're going to discuss my portfolio updates. I haven't done one in a while, so I think this video would be a really nice thing to have just to see what's going on. We're going to go through all my different portfolios as well as my strategy of what I will be doing going forward. This is my entire spreadsheet here. The February numbers are kind of in right now from today 2/11/2022. My total portfolio value is $293,964.71. It is much less than the all-time high of $385, but that is okay because our goal here is long-term investing and we don't care about the month-to-month fluctuations. What we do care about is this value increasing over time. I have 4 different portfolios over here if you're looking. I have a growth portfolio. I have a Roth IRA that I predominantly invest in dividend stocks. I have a 401k, and then I actually just recently opened a crypto account. What is different compared to 2022 versus 2021 is I used to have an options account. I no longer can use that option account because I'm going to use that options account to pay for my massive tax burden that I will have in 2022. So whatever value or money I had in that account, I'm just going to use to pay the taxes off. Gotta pay the tax, man. We still have the growth portfolio, dividend stocks in the Roth IRA, and then we have the 401k, which is, the set and forget it. But then I was also accounting for some real estate in some of these calculations here in the net worth. But I realized that that is the condo that I live in. So me and my fiance, we bought a place, we have a mortgage on it. And to me, that's not really an asset while we're living in it. At some point when we do move out and use it as a rental property, at that point, it will be an asset. But I think moving forward is I am no longer going to keep that calculation in there. Going to this portfolio over here, in my growth portfolio, $203,349.36. In my Roth IRA, $23,657. 401k, $66,658. I am actually going to show you guys these accounts. The first account that I have all my growth holdings is in my Robinhood account. I switched over my Tesla that was in Fidelity, and I moved it into my Robinhood account. So I have my Tesla over here. I also am continuing this Palantir, which the Palantir share price substantially dropped. And I kind of wish when I was making my options income this last year that I was setting aside cash to pay for the taxes. I didn't realize I was going to make over $110,000 in realized gains. It's kind of one of those things where I'm going to have to pay the stupid tax where I will have to, because I'm going to have to probably sell these at a loss unless for some reason Palantir skyrockets up after their earnings on the 14th. I'm going to have to use that to pay my taxes. So realistically, the only thing I have here is my Tesla shares. The reason I switched over to Robinhood is, they have free trades. Their margin is substantially cheaper than Fidelity. Fidelity, I was paying 6.8, almost 7% to borrow money, where in Robinhood Gold, it's 2.5%. It's almost a no-brainer if you're going to be using money. If you're going to be borrowing money, probably better to use Robinhood. I know there's a lot of people that are hating on Robinhood because of the halted the trading with GME and AMC and stuff like that. I use it for its utility. The user interface is amazing. The Fidelity user interface sucked. So those are just like my 2 cents for that. Just showing you guys that this is my account. I just recently switched over all that Tesla shares over. So that is my Robinhood account. We're going to go into the passive income account. And in this passive income account, I have my dividend holdings. So this is my Roth IRA. So with the Roth IRA, you're allowed to put in $6,000 every single year. I've maxed out my Roth IRA for the last couple of years. I will probably do the same this year. The only difference this year is every single week I'm going to put $115 versus in the previous year I tried fully funding my Roth first before I started putting money in the brokerage account. So this year, just a little switching it up. I'm still going to be fully funding this year, but instead of doing it sooner, I'm expanding it because I still wanted to capture some of these really cheap Tesla prices or the growth holding prices. In this M1 Finance, I love M1 Finance for dividend investing. I think it is the elite platform when it comes to dividend investing. I really do think if you are a dividend investor, M1 Finance is the route to go. Now switching over to my PIAA, $66,658. So this is a retirement account. And for the most part in this retirement account, it's a set and forget it type of thing. It's index investing. You put your money in every 2 weeks and hopefully by the time I retire, I'm able to access this money. Inflation is at 7.5%. It's almost a matter of time before interest rates go up. I mean, the market just got killed recently, especially growth holdings last couple of months with the talk of increasing interest rates and stuff like that. So moving forward, I think the best strategy is to continually dollar cost average. After doing my due diligence and research, I've found that the best way, if you look at the sequence of ways, the best ways to invest, the best way to invest is to lump sum invest. So if you had all your money you'd ever invest in your entire life and you invested it, that's really the most effective way to invest, because it's about time in the market and not timing in the market. The only problem with that is most people won't have the $400,000 they will ever invest in their entire life. So the next best approach is dollar cost averaging. So, with dollar cost averaging, you're buying high, you're buying low, and ultimately it averages out in the middle. So in the long run, your gains compound. Now, if you look at my spreadsheet over here, for the most part, I've started tracking this. This was my first paycheck on the 14th, and you can see I put $950 into this growth holdings. And then, this is a 2-week period, so I put $115 each week. You can see the dividends being paid out here into my Roth IRA. The 401k, you're not going to really get dividends, but you can see how much I'm contributing from my work. And then my crypto, I really don't count the crypto as anything. Not a crypto bull, or I'm not super into crypto, and I just think it would be a bad idea to be investing a lot of your money into crypto. But I do like the idea that I could actually stake my money into crypto. So what I did is I have enough USDC coin to stake it. Then I want to get enough Ethereum, stake that. Same thing with Bitcoin. And then at some point use Crow to do that. I really like the crypto.com app. It is super efficient. So if you guys are interested, take a look at that. So you can see here, I'm just continually dollar cost averaging. And the plan is, in a high inflationary market, is really be in a position where you're investing in dividend companies. It doesn't necessarily mean the company's doing bad. It's just the economic outlook looks bad, but you're getting paid dividends. And that is actually the position you want to be in if you were going to be in this like high inflationary market. Another thing to think about is you need to have some high conviction plays. So in this type of environment, you want to invest in a company that is increasing their revenue quarter over quarter, but also have low debt. With the interest rates going up, it's going to affect a lot of these companies. That I personally like Tesla because they only have 1.5 billion in debt and they're increasing their revenue quarter over quarter. They're going to hate that pick, but it is a hyper growth company. They have been expanding the revenue. Last year was 70%. That is a huge amount. This is just the state of my portfolio. I'm going to continually dollar cost averaging. I'm going to continually put my money in high quality companies, and I will eventually be making some option videos. The only thing about the options investing is I'm waiting for the market to drop even more to implement margin, because I want to see what my margin of maintenance would be. And I think if I was to use margin right now, we're still kind of at the top. I would like to see a 40% drop before I would implement margin. So right now I'm just sitting on the sidelines, just dollar cost averaging every single 2 weeks whenever I get paid. So, I appreciate you guys watching the video, and I hope you all have a good one.